bringing along with what you've said in the finance bill, but it's a completely different and an important exercise to do, to go around the country, take the budget and its contents to the people, sit face to face with the industry leaders, associations, trade bodies, and so on, and if necessary, explain what was the circumstances in which you have made the budgetary announcements. If any clarifications to be needed, to be given, give it, and be directly involved with people who have given you the inputs for making the budget. And you, after all, being in the government, made it in a particular way, and after that, it's only right that you go back to say, this is what we've done, and this budget is for this year, with a certain blueprint for the next 5 years. So it is in that, kind of a format that we have thought about going around the country. We've done one round of 3 cities, which is the beginning, starting from Mumbai, going over to Chennai, and then Kolkata. Yesterday we were in Hyderabad, today in Bengaluru, and there will be a Guwahati, an Ahmedabad, and also a Lucknow. So much before the session commences again, this is what we are expecting to do. And again, the layout for the day is this morning it's with you all. Post lunch, we have a session with economists and observers and any Chartered Accountants Association representatives or any others. And end of the day, there will be a press meet. Now, one thing I do not want to labor here is to talk about the features which we've brought in the budget. Again, recall all the steps that are taken for reviving certain aspects of agriculture, bringing in, doubling the income related of farmers related measures and so on. So I'm not really going into the details. Since Bengaluru was very involved in the process of consultation even after the July budget, from July to February, every announcement that had been made almost on a fortnightly basis, many of the suggestions weren't completed even then. So many thoughts which were left behind were also taken up during the budgetary preparations, and some of them have got incorporated in the budget. So when the CBDT chairman tells us that it was a long, arduous exercise of preparing the budget, he's right in that. Probably not waiting for the consultations to start prior to beginning of the preparation of the budget. This process this time, because of the way in which the economy and the challenges were demanding many measures to be taken by us, from July the preparations were kept alive. And when we reached the end of the year, with also the announcement made for the infrastructure pipeline, we were on course to go into the specifics of preparation for the budget. So January, as usual, you had the budget preparations. Broadly, the contours which guided us through the, to navigate the path in the preparation of the budget was one, of course, we had to keep our macroeconomic considerations in mind. Two, given the widespread call for giving stimulus for consumption, that the government should spend, and because consumption should really be given that kind of a push, there should be every avenue for the government to spend. That voice, which was very loud and clear. And also learning from the experiences of 2008-9, government should spend with an understanding of how long it has to be done, and that the expenditure of the government and the investments that the government was making have to be towards creation of assets rather than going for any kind of splurging of money in the name of wanting to give the stimulus. An essential learning from 2008-9 experience. So macroeconomic considerations, attending to the call of giving stimulus, boosting consumption, learning from the experience of 2008-9, and above all, making sure the investment environment of the country required a certain kind of boost in some aspects which till now has not been touched. So every angle which is important in keeping the investment environment conducive for our country, whether for smaller investments or big ticket investments. So looking at every angle of what is required to be done for keeping investment coming into this country. So I repeat, macroeconomic consideration, giving demand a boost, making sure we learnt the lessons from 2008-9, and above all, making sure investment environment is kept up. So these were broad considerations. We of course have kept everything open for everybody. You've seen the budget, gone into the details, lots of people have written about it. Now of course it's time for all of you all to engage with the entire team. I'll leave my opening statement at this, and I'm sure I'll be able to learn a lot more things from here. Thank you.
Thank you, Madam. We now throw open the House for interaction with the Honourable Finance Minister. I hand over the proceedings to Ms. Vandana.
Honorable Finance Minister, Madam, and respected dignitaries on the dais, we have with us eminent business leaders who are partners in nation making, and we also have representatives from premier business associations and trade bodies. Before we commence the proceedings, let me apprise you of some of the ground rules to make this interactive session more interactive and more productive. Please make sure that your questions are very precise, concise, and to the point. Preferably restrict the questions to the proposals made in the Budget 2020. Please do not ask supplementary questions and avoid repetitive questions. I may also mention that Honorable Madam and respected dignitaries would take up the question in small batches. Madam, with your kind permission, we'll begin the session. We begin with Mr. Kamlesh Badani, Taxation Head, TE Connectivity.
Good morning, ma'am. Good morning, everybody else. Ma'am, I wanted to ask you on the e-invoicing timeline of April 1. Since the API integration and the offline utility has just recently begun, is there any thoughts on extending the timelines, or are we still at April 1? Thank you.
I may invite Mr. Amit Gupta, Director Tax, Dell International Services.
Good morning, ma'am. I have actually 2 points from a direct tax perspective and 2 from indirect tax. The first one is on the tax collection at source that's been introduced, 0.1% on 50 lakhs and above goods being sold. Ma'am, while we are trying to prepare for the e-invoicing, which is coming from the GST perspective, TCS on goods would mean another line item on the invoice, and we need time to prepare. Our IT systems will need another change. While we are still trying to get ready for e-invoicing from GST perspective, our request is to give us more time. If this can be deferred by 6 months or some more time can be given, it will give us time and our IT systems to be well prepared. The second point is mainly around on abolition of dividend distribution tax and the reduction in the corporate income tax rate. We thank the government for doing that, and really it's a great initiative. The point related to that is on the income tax refunds. What we request the government to look at is in terms of if the refunds can be expedited. Like on the service tax side, it's really great. We are getting the refunds very quickly and all of that. On the income tax side also, if that can be done, it will be a great help to the. And on e-invoicing, it's a similar thing. There are some clarifications that are required in terms of which are still awaited. So if all that can come, it will really help. Thanks.
Mr. Ketan Dhruv, Director, Bangalore Refineries.
Good morning, Madam. And first, we'd like to thank you for this budget, where you have corrected many inverted duty structures for our sector. That will definitely give us a boost, and also the vision of Make in India. Continuing that forward, we had a few suggestions. Right now, for various exports, you have value addition norm of 10%, whether it be in job work, advanced license, etc. We wish if you can bring it down to a more realistic level, about 3-4%. It will not cost the exchequer anything and help us earn foreign exchange and also give a boost to the industry. Second, there was the IJMRE scheme which allows 0% imports of many goods has to be reviewed. There have been items lying in the list for more than 20 years which is against the local manufacturing now. We can make a lot of products now, but because of zero duty customs import, local manufacturing is not viable, and this needs to be reviewed to give another boost to the manufacturing sector. And regarding TCS, a few of our members sell their products online. We want a clarification that the TCS should not be the problem with the merchant, but with the e-commerce platform, because they have all the PAN numbers, addresses, etc., which the platform never discloses to the merchants who sells on them. Thank you.
Mr. B.T. Manohan, Chairman, State GST.
ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ.
Just one minute. Chairman, GST what?
State GST, FKCCI.
Huh?
FKCCI, Federation of Karnataka Chambers of Commerce and Industry. ನಿಮ್ಮ ಆಶೀರ್ವಾದದಿಂದ ಅದು ಆಗಬಹುದು. ಥ್ಯಾಂಕ್ ಯು ಮ್ಯಾಮ್. FKCCI is an august body representing not less than 8 lakh dealers in the state. We have dealers covering the entire state with ranging from small dealers to corporates. I have only 2-3 points to be brought before you because every day I am getting such references. And one is on this GSTN portal, which is a general subject. If you strengthen the GSTN portal, complaints will be on date in time. Many of the practitioners who represent the trade and industry are facing this hue and cry problem, especially on last 3 days, in spite of we telling them to file their returns early, not to wait for last time. Because of the financial constraints, they are taking to it and see that it is strengthened to have a straight and timely compliance. The other issue, ma'am, is regarding the latest subject on delay of interest, payment of interest on the overall tax liability. Ma'am, today business is in such a way that economics has taken, but what I request to consider this waiving of interest for delayed payment for certain time and help the small traders and also the big traders because GST is new to our country. The third point is on Tran-1 credit. Tran-1 credit is our capital on VAT and central taxes, which was on 1/7/2017. You are very good enough to extend that for those dealers who could not make it because of the GST increases as on 27/12/18 to 31/3/2020. That apart, please see that credit is given because the capital is involved there. ಕೊನೆಯದಾಗಿ ಕರ್ನಾಟಕ ಫೆಡರೇಷನ್ FKCCI is working hand to hand with CBIC Bangalore, State GST. We have conducted not less than 400 plus GST programs, ma'am, and we are continuing to do that. We have a great support from the central GST team headed by our Dr. Nagendra Kumar and state GST team by Mr. Srikar. We are moving even to taluk levels to awareness to dealers to come to the net of GST and do their best for the economy of our country. Thank you. God bless you, ma'am.
About the e-invoice in the GST. As you may be aware that e-invoice, the decision to introduce e-invoice was taken at least about 8-9 months back by the GST Council. Their standards, specs were put out in the public domain. Finally, with the actual product has been rolled out from the 1st of February. and before that also it was put on a pilot basis. So what we have tried to do is in order to ensure that the whole transition has to be made very, very gradual. So we have said that people having turnover more than 100 crores should switch to, currently it is an optional basis, but we are saying that from 1st of April, the companies having turnover more than 100 crores, they should be issuing e-invoice, and that is the decision of the GST Council. Now let us see that who are those people who are having turnover more than 100 crores. It will be in few thousands, because people having turnover more than 100 crores would be, if my memory serves right, it will be in the range of maybe 30,000, 40,000 companies. So we have had a series of discussions with them, the various tax practitioners, then the software providers. So therefore, and this is actually very convenient for the trade and industry, because ultimate objective is that once e-electronic invoices becomes operational, actually the returns can be generated online itself. People need not actually spend time in filing income tax, filing the GST returns, because after all, what is the return? The output tax liability is some aggregation of all your output invoices and then the tax. And then your suppliers, if they have filed returns, then that becomes your purchase. So ideally from the e-electronic invoice, the entire the returns can be generated, and of course with certain adjustment the returns can be filed by the concerned taxpayer. So this is, and we are moving it very, very gradually. Currently it is only for those countries, the companies having turnover more than 100 crores. Also another very important point, that this electronic invoice, which will have a QR code and then all the centrally issued number, it will be also be used for invoice financing, for the working capital loan to be given by the banks on the trades platform. So I think this is a very, very good move, and I think we all should support this. Seeking time extension, and then because there has to be certain end to this. If we still have some difficulty, we have time. The February and March, we can work together, and we should try to do that from the 1st of April. Otherwise, it is very easy for us to ask for time extension and also give time extension, so that the problem keeps getting postponed. But unless and until we confront the problem and confront the challenge and work together, then only we can bring in such reforms in our country. Now the question was raised about the TCS of 0.1%, which has been introduced in our budget this year. Now what is the purpose of this TCS and the TDS mechanism? Now in our country, in fact, when we look at how many people pay income tax in the country of 130 crores, you just heard our Prime Minister just few days back. In a country of 130 crore, only about 1.5 crore people actually pay income tax. And then, if you contrast that information with number of expensive cars being purchased, the people traveling abroad, people buying expensive, the real estate, the flats, the properties, and those things, these things are being talked about. So gradually over the last few years, we have been using this TDS and TCS mechanism to bring people into the tax net, because for some reason, if they are, getting out of the tax net, this is a very, very, the measured approach to bring them in the tax net. Because sometimes, and here also, the suggestion was made that you have a PAN number, you have full KYC, why don't you go after them? Now the question is that if you really go after them, then, you have to go after, large number of people, and then you will say that this income tax department, the tax terrorism, that, the notices are being issued and so and so. So in order to strike a balance, that you don't have to issue a large number of notices, and at the same time, those, who should be paying taxes, they should pay tax, and therefore this 0.1% of the TCS, particularly those companies having turnover more than 10 crores and making a sale whose annual value is more than 50 lakhs. Just see how many companies the companies having turnover more than 10 crores in our country is not more than 3 lakhs. So first of all, this TCS requirement will apply only to those 3 lakh companies, number one. Then those companies also, if they are making sales of less than 50 lakhs, there is no TCS requirement. The TCS requirement of 0.1% will kick in once the annual sale exceeds 50 lakhs of rupees. So therefore, because what we saw, when we are trying to match the income tax data with the GST, we found that the people have shown turnover of 100 crores in GST. Income tax, either they have not filed the tax return or they have shown income of only 3 lakhs. Is that condition acceptable to all of you and all of us? So therefore, this particular measure has been brought in. Then the question was raised about the abolition of DDT, and then, naturally the dividend, there will be a 10% TDS on the dividend, and then the refund will have to be expedited. I agree with you. Now, income tax refund, for example, this year income tax refund, in fact, one of the reasons, why, we are, of course, we did corporate tax cut. The economy also grew at a little lesser rate. So that has impacted our tax collection. The net tax collection, we have given this year 1,70,000 crore as a tax refund. In this financial year, 1,70,000, and if you contrast this with, the previous year information, we gave refund of around 1,30,000 crores. So 40,000 crore, refunds have been given. If the income tax returns are filed, and if all those informations get matched with the other source information that we are getting, like, the GST, the bank account, the financial intelligence unit, or the whatever 26AS, if all those informations are matching, most of the refunds are getting issued automatically. In fact, we all recall that after 7, 8, 10 years back, for getting a small amount of refund, people had to go to the income tax office. Now in this hall, you go and, many of you must have experienced that all of you get your income tax refund directly into your bank account without approaching any income tax office or making an application. Yes, in some cases, the refunds are held up because it requires certain verifications, and that also we are trying to automate as much as possible. About the job work part, you have made some suggestions. Please give us a note. We will do this. And the GST portal, the strengthening. Yes, this is something, we have been working right since inception, the 1st July 2017. Our technology partner is Infosys, and we have, we are working very, very closely with them. I must say here that, the kind of problems that were faced in the first few months of introduction of GST, if you compare with that, the problems are lesser. But having said that, can we just, be complacent about it? Answer is no. We have to ensure, because our taxpayers are not statistics. I can't say that 99% of the taxpayers have no problem and therefore let 1% taxpayers suffer. The taxpayers are not statistics. We have to ensure that not even one taxpayer should face any problem, and therefore, we must resolve that problem. We are working with our Infosys partner, the technology partner Infosys, and we will try to resolve this. We have also brought in from this month, the 20th is the last date for the filing the return. We have staggered it. Till we actually, make the system completely flawless. We say that by 20th, all those having turnover more than 5 crores, they will file the income tax return. Then, so that takes care of almost, 92% of the companies. Now the rest, so 92% of the companies, they will be filing returns on 22nd and 24th. And then only the 8% of the companies will be filing returns by 20th. So this is what we have tried to do this. You spoke about this, the interest on the gross and the net. You must have read our clarification in the newspaper. If you want still some elaboration, we can give you that. But then I think, that has already been explained. Thank you.
Moving forward, we have Mr. Lalit Kumar from NLK & Company.
Good morning. Madam, my question relates to Vivad Se Vishwas scheme. Firstly, why can't government allow all appeals filed before 31st March 2020 instead of 31st Jan 2020, as things will be quite clearer by then? Because there are many assessees who have filed appeal late due to various reasons. allow them to file with condonation and come into the scheme for settlement, as this is a scheme to reduce litigation and boost the coffers of the government. Secondly, what if a declaration is made on last date of March, that is 31st March 2020, and obviously the order of designated authority is received after 31st March 2020 only? Then the board can extend the benefit of tax rate and penalty to all such declaration made before 31st March 2020, even though the tax will be paid later. Thank you.
Mr. Nitin Kumar, Proprietor Nitin Kumar P.
Good morning, ma'am. Good morning, everyone on this. My first question relates to Vivad Se Vishwas scheme, wherein where an appeal is filed for the grant of stay. As we all know that as per the CBDT circular, 20% of the demand has to be paid. So if a person opts for Vivad Se Vishwas scheme, can the amount which has already been paid under the normal provisions be adjusted, and then he can opt for Vivad Se Vishwas scheme? Secondly, my question relates to 115 ABA, where 15% of the tax rate is given to manufacturing companies. The section clearly states that if you earn any other income, then no expense would be allowed against that particular income, and the tax rate would be 22% for that particular income. So why is there disparity between the two tax rates when I already opted for the 15% scheme and I have to pay 22% on the other income sources which I have earned?
Mr. T.V. Mohandas Pai.
Madam, welcome home. You are our MP. You come home to us. Thank you very much. Please come very often. We're missing you here. You can't go to Delhi all the way. Please come. Madam, on the ESOP, you have been very gracious, but the ESOP is an unworkable scheme. I will ask Sid, our technical expert from IVCA. IVCA represents all the venture capitalists, venture capital firms and startups. They'll give you a solution which is very easy. You spoke about 27,000 startups. There are 45,000 startups. 11,000 have got funded. They created $150 billion of value. And by 2025, we'll have 100,000 startups creating $500 billion of value, 3.25 million jobs. Right now, they created 750,000 jobs. Every year, they create 150,000 to 200,000 jobs. We gave all this data to the Honorable Prime Minister also and asked him to become our mentor. Because, Madam, we want to create the new India which you and a Prime Minister are talking about, but we want your support. We can't do that with one hand tied behind our back. The ESOP scheme is a classical example of well-intentioned but badly designed. If you read the details, whatever you spoke has been taken away. Sid will explain. The second thing, Madam, is about tax parity, which is a big issue. In the last budget, you gave a surcharge on listed and unlisted stocks. After the furore of the FII, you are gracious enough to withdraw the surcharge on listed stock. On unlisted stock today, unlisted companies, capital gains after 2 years is 28%. Now, in the venture capital industry, we are not able to get capital. After $60 billion raised in the last, from 2014 till now, under the NDA, $60 billion, only $6 billion in Indian capital. We are going to become a digital colony. We need another $100 billion from now till 2025. And the Chinese are taking over companies, the Japanese are taking Americans. We have 34 unicorns, 18 are outside India. 60 unicorns, some 20 are outside India. They're all going away. We want them to come back. We want them to be here. So this tax pact is important. So please remove the surcharge on capital gains of unlisted stock to equate it with listed stock, and please consider reducing it to 15% because unlisted stock is illiquid. It's got greater risk, longer time, and you don't charge higher tax on a much riskier instrument. A riskless instrument, not riskless, a less risk instrument like equity in the markets is at 11%, which is good. But here, 28% is unbelievable, madam. No country charges like that. Please consider this. Otherwise, we can't get capital. All of us will have to go to Singapore, raise capital, invest in India. And this is very important for us. The next issue, madam, is about Section 9. Now, Section 9 for fund managers, we have been talking to government for 5 years. Shri Arun Jaitley was gracious enough to amend the law 3 times. All 3 times, the IT department makes sure it's unworkable. What is Section 9? Let me give you data. The FPI have put in $450 billion into the markets. We got $250 billion in private equity, $150 billion in venture. That is 450 plus 200, 650 plus 150 is about $800 billion. Out of which only $250 billion is managed in India. The rest is managed outside. Even if you assume $500 billion is managed outside, $10 billion of fees are paid outside because the Section 9 and the connection of a team business with people who manage it here. We went to government and asked them a very simple thing, madam. If there is a fund registered with SEBI or a fund which comes under the Government of India guidelines, which invests in India, which appoints a fund manager in India, and the fund manager is regulated by SEBI with no other conditions apart from regulated, whatever fees he gets here should be taxed in his hands and not attributed to the fund. It's very simple. This time you put in you change the law, put in two conditions which are unworkable because these conditions don't work. We want a simple regime where we can get all the money to come to India. We'll produce 20,000 jobs. Why should our money invested here be run by somebody from outside? It's a very big issue. 3 times Jaitley Saab saying, got it amended, we went to him, it didn't work. Make it very simple. The next issue, madam, is this TCS. This withholding tax on remittances. It's very good. Now, madam, if there's a mother who earns 10 lakhs as a school teacher, she borrows money from her family, sends about $100,000 to educate her son in America. Everybody wants their children to go to America to get a master's degree. And she sends $100,000, 70 lakhs. 5% is 3 lakh 50